Hi, this is Walter Montero, and you're listening to this week's edition of the Real Estate and Mortgage Show. Hi, everybody. Welcome to this week's edition of the Real Estate Mortgage Show. We're a few weeks in now. I hope you've been enjoying the episodes up to now. This is actually our first recording in 2015. I was away for the first portion of the year, so we pre-recorded a few of the episodes in 2014. You know, when I wished you a Happy New Year in the first episode, it was still 2014. So I want to give you an official Happy New Year, because this is our first episode of 2015, and hopefully we have a good year ahead of us, and the real estate market is going to serve us well here in Cambridge, Kitchener-Waterloo. Anyway, so I want to talk to you a little bit about HST. So HST is the Harmonized Sales Tax, which is basically applicable to real estate transactions in Ontario. Okay? So, but I want to sort of give you a sort of a breakdown on how it's applicable and how you're going to pay it and how you're not going to pay it. So first of all, HST is applicable definitely on new construction in Ontario for residential properties. Okay, so if you're buying a property, for example, for $350,000, it's subject to 13% HST. Okay, so that would basically make it worth close to $400,000. You're talking $395,500. All right, but you don't necessarily pay that. Okay, because you are subject to some rebates. So there's rebates, but they're broken down into two elements, because there are two different taxes actually being charged there, which is of course the GST and the PST. So on the PST portion, on our example of a $350,000 house, you're looking at GST of $17,500, but you're entitled to a 36% rebate of that, which is $6,300. And on the PST portion, you're going to be paying $28,000, which is 8% of the purchase price, but you're subject to a 75% rebate of the PST portion, okay, which basically calculates to about $21,000. Okay, so the total net HST that you'd be paying on a $350,000 house is $27,300. So the real purchase price of the house is $368,200. Now, when you do that, most builders, in my experience, include the HST in the purchase price. Okay, they do that. Okay, so in other words, they would sell you the house for $368,200. But in the agreement of purchase and sale, they would actually have a form in there that you would be assigning the rebates back to the builder, okay? Because he's counting on those rebates coming back to him, which is a total of $27,300. So he'll get that money back, okay? Now, the one thing that I want you to be clear on is this only applies if you are actually going to be occupying the property, okay? If you're going to be an owner-occupied, if the property is going to be owner-occupied, then the transaction can unfold exactly as I told you. The form can be signed, you can assign the rebate back to the builder, and everything's fine. Now, if you're buying this brand new property for the purpose of investment, you're still entitled to these rebates, but you're not entitled to the rebates right at the transaction, okay? Because the way that the government has set that up is they will only give you the rebates after you have a tenant in the property. Okay, if it's a single family property, you can't apply for the rebate until you have a tenant in the property. Okay, if it's a multi-unit property, like let's say a fourplex, then 75% of the building has to be occupied before you apply for the rebate. So in other words, 3 of the 4 units would have to be occupied before you get your rebates. So that means you'd have to be cutting a big fat check on the day of closing for the HST, which you would still get those rebates back, but you would only get them back after you got your tenants in there. All right. Now, the one other thing about HST is that there are caps on it in terms of how high you can go before there are no more rebates. Okay. So in Ontario, the cap is $450,000. Okay. So if you buy a property for $450,000 or greater, the GST portion of the rebate is gone. So you no longer get that. So you're going to have to take that GST portion on the chin, which I think equates to about $22,500. Now, the PST portion You are still entitled to 75% of the 8% back, but that part of it is capped at $400,000. Okay, so that means you're only going to get 75% of the 8% back on $400,000. Okay, so that's how the HST works in terms of residential new construction in Ontario. Okay, on residential resale properties, HST is not applicable. Okay, but it can be. So this is something that I want you to be very careful with. Okay, because the way the government look at HST in terms of whether it's applicable to a real estate transaction or not is it depends on the use of the property. So if you're buying a property, for example, that is commercially zoned, and it's been used for commercial, then it is subject to 13% HST. There's no rebates. You're going to have to pay it, and that's just the way it is. Now, if you're an HST registrant, you are technically HST exempt, so you can, sort of work that out with the lawyers in terms of working out the math and paying it later. But if you're not, then you're going to be subject to paying the HST. Now, one thing that I want you to be careful with is this, okay? The way the government looks at whether HST is applicable or not is it depends on the use of the property. They don't necessarily care whether the property is zoned commercial or not. It's whether it was used for commercial purposes or not, okay? So, for example, if you're buying a house from, let's say, a small lawyer that is conducting business out of his house, then a portion of that sale price is going to be subject to HST, all right? So the one thing that you want to do to protect yourself when you're buying a house like this is that you always write into the offer that the HST is included in the purchase price, okay? I know some agents will put in not applicable. That's not the right way to do it because, quite honestly, we don't know if it's applicable or not, okay? CRA can come along 3, 4, 5 months down the road, find out that the property was commercially used, and all of a sudden they send you the bill for the HST. You don't want that happening. So never put in not applicable. Always put in included in the purchase price, okay? Because that way, if there's ever an issue, then it's the seller's problem and not yours. And sellers, be aware that if you're, selling a property that you're conducting business from, then you've got to be careful in terms of you're going to take a hit on the HST. So you've got to be very careful with that. In fact, I'll give you a bit of a funny example. A little while ago, actually quite a few years ago, this was before the HST, it was back in the GST days, we had a client that had a vacant fourplex. And they sold the property. They simply bought it and held it. They were a cash buyer. They were just sort of land banking in terms of just putting their money into the property. Now, the property wasn't subject to HST, or I'm sorry, GST, because it was a residential resale property. But he never put a tenant in it. And the one thing that we weren't aware of is that his creative accountant had him register the property as a bed and breakfast. Don't know why he quite did that, but there were some tax reasons as to why he did it. And as a result of that, the property all of a sudden became subject to GST, and then the seller had to pay it. Thank God we put in a clause into the agreement that put it included in the purchase price, so the buyer of that property didn't get stuck with the GST, but the old seller did. Okay, so something that you've got to be very, very careful with. It's big money, and the last thing you want is a big surprise like that in terms of getting nailed with HST. Okay, now HST is still applicable to real estate transactions in one way, shape, or form. Okay, and by that I mean by the services that are provided in a real estate transaction. Services such as home inspections, services such as legal fees, okay, or real estate commissions if you're a seller. Okay, so if you're a seller and there's a real estate commission is subject to HST. Okay, the one thing that I want to make very clear is, especially if you're a buyer buying a property, I'm just going to take another drink here, buying a property with less than 20% down, so in other words, you're going to need CMHC insurance. The CMHC portion of the mortgage is actually subject to HST. So that CMHC premium that the bank charges you or the government charges you, that portion is subject to HST. So a lot of times that's a little sucker punch to the buyer on the day of closing, because a lot of times they're not even made aware of it, that portion of it is subject to HST. So HST is applicable to all transactions in one way, shape, or form, but the big differentiator is whether it's new or resale. Okay, so I hope that makes things clear. And if you have any questions, by all means, feel free to give me a call. You can reach me at 519-624-9222, or you can send me an email at walter@maximumresults.ca. Okay. Now, again, just another little reminder for you people that listen to us on iTunes. We'd certainly appreciate it if you went into iTunes and gave us a rating on the show. Hopefully, you give us a 5-star rating if you like the show. If you don't like the show, then give us a low rating. A rating would be great. We'd certainly appreciate it. And I look forward to talking to you again next week on the Real Estate and Mortgage Show. Have a great week.